Good morning, everybody. This is the live market open for Tuesday, November 24th. I'm Yohay on Forex Crunch and Market Movers podcast, doing the show for FX Street as usual. Today, we're going to have a much busier day than yesterday, perhaps the busiest day of the week. As always, we're going to cover recent developments, and there were quite a few, charts and levels, the next 24 hours, and of course, your questions. If you can't see the chat box under the video, please go to tlk.io/fxstreet-forex-live-video. So what did we have yesterday? We had in the Eurozone during the show, we had better Eurozone PMIs. These purchasing managers indices, which are forward-looking surveys, they came out better than expected, especially in Germany. In Germany, we had a beat also in the all-important manufacturing sector and also in services. In some measures, they were the best in 2 years. Anyway, these show that the ECB policy, for some, of course, it shows that the ECB policy is having success and there's no need for more. Now, we had a German member of the ECB. Her name is Sabina Lautenschläger. Hope I'm not butchering the name. Anyway, she said there's no need for more action. For euro dollar, it was mixed because, yeah, we had the euro dollar climbing after those PMIs. And it went up to 106.55 or something like that. But then when we had better than expected, we had okay as expected news in the United States, we've seen once again that okay news is really good enough for the US dollar, and we had a strengthening of the greenback across the board. And for euro dollar, we saw this fall to a new cycle low of 105.90. From there, we had it climb back up, and we're back to the same old range. This 106.30 line is a bit shattered, a bit broken from all directions. So we're looking for a new direction, but we have quite a few things to trigger action today in euro dollar and elsewhere. Before we move to today's events, let's talk about other things going on in markets. Yesterday I mentioned these kind of rumors about the Fed's closed meeting. Well, nothing happened. So it was just a lot of hype about nothing. So we're not going to talk about that too much. Existing home sales came out. They came out. They were okay. They were 5.36 million instead of 5.40, and a slide from 5.55 last month. But it was all in all okay. Another thing that we had yesterday, I think we mentioned the OPEC meeting yesterday, about the OPEC members meeting on December 4th, and towards that event we have some things going on. For change, Saudi Arabia changed its idea. Now they say that the Saudis say that they want to cooperate with OPEC members, and more importantly with non-OPEC members, in order to stabilize oil prices. This is the first time that they're talking about cooperating, not only cooperating, but also basically hinting about cutting production, trying to push prices up and not control its market share. If you remember, around this time in last year, there was also an OPEC meeting, and they decided, the Saudis, against what other members in OPEC wanted, such as Venezuela, and decided not to cut production, but to control their market share in the wake of the US shale production, which came out, was already quite high. Okay, so they managed to maintain the market share. They drove prices down. Of course, it hurt not only them, but it hurt the US shale industry, but also the Russians and everybody else. Now they're talking about cooperation. It's a change of policy. Perhaps they're feeling the heat from the low oil prices, but let's see if they turn these words into action. We did see some kind of reaction in oil prices. Let's put it here on the screen. Yeah, so we've seen oil prices jump back up. They're still not breaking above resistance. 42.50 is the line to watch. Okay, we've seen it spike a bit higher, but perhaps we can move the line just a bit. But all in all, look at it. 42, okay, 70 perhaps is the new resistance line, but we're back down to 42.20. This wide range of 42 to 42.70 is still intact. Let's see if we have some kind of real change, not only words. It was quite a significant development yesterday, and it had an impact on dollar CAD. Dollar CAD was already reaching high levels, 134.35 yesterday, and which is quite close to the 11-year high of 134.60. Okay, so if you wish, this is a lower high. Okay, and then we fell back down because the Saudis are talking about producing less oil. Let's see if this is a real move or not. Okay, good morning everybody. Jax, Sheko, Fabian, and everybody else. Looking forward to your questions as usual. Let's talk about a few currency pairs. Pound dollar has been hurt yesterday. We've seen fall to support here at 151.10, losing the support line of 151.60. Trying to struggle to get back above this 151.60, still on low ground. And next lines to watch are 152, 152.50. On the downside, 150.60. I would say is minor support ahead of 150.25. Okay. Dollar yen, we've seen it wobbly yesterday. Still keeping a safe distance from 123.60. It found some kind of resistance here at 123.30, sliding now down below 123, and we're seeing some kind of weakness in the US dollar. 122 is significant support. Dollar CAD we talked about. Australian dollar is making is gaining. 72.14 is the current level. I still see 72.20 some kind of resistance ahead of 72.80. Support is at 71.50 and 70.65. Okay, and the Kiwi dollar, well within the range, 65 to 65.70 is the range for now. Let's talk about the big events we have today. And there are quite a few. So let's see. So just after the show, we have an important release from the Eurozone, from Germany, the IFO Business Climate. This is Germany's #1 think tank, a conservative think tank, close to the government, sometimes Eurosceptic, sometimes anti-Greece. Anyway, their opinions matter a bit less at the moment. What's more important is that they have a very wide survey. They talk to a lot of people, and this reflects the sentiment of German businesses better than the ZOO figure, which is released earlier. So the most important one to watch here is the business climate one. It's expected to stay more or less the same, 108.2. Okay, it's a forward-looking one. The current assessment one is expected to slide just a bit, 112.6 to 112.3, and expectations perhaps more to the future, also a small slide. So basically, we're expecting most of the same from IFO. But any small surprise from them can move the euro, okay, because they are very influential. Okay, so this is a first and significant event today. Earlier today, we had a confirmation of German GDP. We had the revised and final version. Hardly ever moves from the initial release, so it came out at 0.3 euro for year, and seasonally adjusted 1.7, unseasonally 1.8. Anyway, as you can see, everything as expected. Okay, so that's what's for the euro, main dish for the euro today. So we're seeing the euro now strengthen just a bit, 106.43. I see resistance here at 106.70. Let's see if we can move all the way up here if we have more positive figures, because yesterday we had some positive figures. Okay. Then just 5 minutes afterwards, we have a speech released, and Glenn Stevens, the governor of the RBA, Reserve Bank of Australia, is going to talk. And let's see if it's some kind of dinner event in Australia. Let's see if he moves the Australian dollar, which is now on the move. I have a question from Fabian. Given that German ZOO was good, does German IFO should probably also up, where can this push euro dollar up? Well, there isn't always such a good correlation between ZOO and IFO. Sometimes there is. We've seen ZU bounce back up, okay? We've seen quite a few consecutive drops in the ZU figure, and now finally it escaped negative ground, escaped this minus sign, which means pessimism, and moved higher. But so perhaps, according to ZU, Germans are less worried about Volkswagen, less worried about other things. But perhaps this IFO release, which gathered information also after the Paris attacks and is considered a more reliable indicator for the German industry, the German economy, it might drop a bit. I'm not sure it'll go up. We'll see, of course, quite shortly, but I don't see it. Anyway, the lines I'm watching on euro dollar on the top side, to answer your question, 106.70, 107.10, and 107.60. On the downside, I would say 106 still provides some kind of support after this fake push lower, and much more significant support is at 105.30, because that was a support line back in March. Sorry, in April, right here, just in the middle of April. And of course, the most critical support line is 104.60. There's lots of talks about parity, not parity. And of course the big questions for euro dollar is the questions are: is the ECB decision priced in next week? Yes or no? And is the Fed decision already priced in? According to Goldman Sachs, each decision will take the pair 200, 300 pips down, and this will result eventually in parity by year end and even lower levels early next year. According to others, a lot of this is priced in. My opinion is somewhere in the middle. I believe that ECB action is not priced in because Mario Draghi has a tendency to under-promise and over-deliver, and he'll do this kind of shock and awe. And with the Fed, it's already beginning to be a bit priced in. I still believe that we'll have a stronger dollar after the actual move, but perhaps afterwards we'll have some kind of a pushback. Okay, that's my opinion on these huge events in December for euro dollar. Okay, we have more events today. We have the biggest event of the day and the week, I believe, is the release of updated, revised US GDP growth, gross domestic product for the United States in the third quarter of 2015. We're expecting an upgrade this time. Okay, we're expecting, let's see the numbers here. It's not as important as the first release, but it's still of importance. Okay, so in the first release you had 1.5 plus 1.5. It's an annualized growth rate. Okay, it's not comparable to the UK numbers. So if you compare it to the UK, it's around 0.4 quarter over quarter. And this time we're expecting an upgrade from 1.5 annualized to 2%. Okay, because we had some improved inventory data and other related stuff. Okay, so that's the main event of the day. But also with these revisions, with expectations, with more data out, economists often miss. So we're not sure. We're going to have two, perhaps we'll have less, perhaps we'll have more. And that will be interesting to watch, of course. And at the same time, we have good trade balance. It's sort of an early release for the trade balance. It's expected to show slightly bigger deficit, 61.8 billion, sorry, instead of 58.6. This is a relatively new release, and it'll be overshadowed by GDP. At 2 GMT, we have the US Case-Shiller HPI. It's considered the most reliable index for home prices in the United States. Let's see it here. Of course, focusing on the main events. Year over year, we're expecting a rise of 5.2 in home prices, similar to 5.1. We've seen in 2013 and 2014 high rises, around 10%, and now we're on lower levels, but still quite a healthy rise in home prices. At 3 GMT, we have the CB Consumer Confidence, the Conference Board Consumer Confidence, and it's expected to rise a bit from 97.6 to 99.5. It had already been above 100 points. If it rises above 100 points, it could have a more significant positive impact. This is a figure for November already, and we're very, very close to Black Friday, Thanksgiving, and the Christmas shopping season. So this could imply what consumers are intending to do, what they intend to do during the shopping season, during if they intend to spend a lot of cash or not. As I think I mentioned before in the show, the correlation between consumer confidence and actual retail sales is sometimes a bit weird. Okay. Last event for the day, and then I'll answer your question, Fabian. We have Australian construction work done. So we have early in the day speech by Stevens, and then closing the day for the Aussie, a busy day for the Aussie as well. Construction work done. After a rise of 1.6, we're expecting a drop of 2.1% in the third quarter. That's important because we're still waiting to see how much correlation is left, and of course there is left between China and Australia. So on one hand, we have a Chinese slowdown that hurts Australia. On the other hand, we have some kind of few signs that the Australian economy is beginning in other sectors, not only mining, to show some signs of strength. And let's see in this sector as well. Okay, so Fabian asks, could you please explain what happened about CPI and Euro and BCE saying they're happy with the current levels? Who said that? BCE, you mean European Central Bank? You mean the Banco Central Europeo? Or so anyway, could you please clarify? If you're talking about Mario Draghi and his mention of CPI, because you asked about the euro, then what we had this week, what we had last week and also the week before, we had Mario Draghi talking about the president of the ECB, European Central Bank, talking about the strengthening of core CPI beginning to weaken. Okay, so if we have headline inflation influenced, of course, by energy, by oil prices, and that's down, that's no surprise. At least we had core inflation, thanks to the ECB actions, at least we had core inflation a bit rising. And he said there are signs it's beginning to weaken, and he also said that looking forward, inflation expectations are beginning to deteriorate. And the meeting minutes from the ECB showed that unless there is some kind of dramatic improvement in the in inflation figures, inflation expectations, unless there's some kind of turnaround, they're going to act in December. Okay, so that's what he said, and the influence. What the actual data has shown is that core inflation ticked up once again in October to 1.1% year over year. Still not convincing, still far from the target. The target is 2% or a bit below. 1.1 is not a bit below, it's a lot below. And the target of the ECB is not core inflation, it's headline inflation. So all in all, we don't have any kind of all in all, we're not have a comment here about the camera. All in all, we're not expecting any kind of sorry, I lost my line of thought. Yeah, so all in all, despite the fact that core inflation is a bit rising, it's not the mandate of the ECB. It's not high enough, and Draghi sees it as falling. Okay, so more questions. This is the chart of euro dollar. Euro dollar this morning is strengthening just a bit, 106.40. Anyway, let's see what other movements we have here. More currency charts. Let's review perhaps, more currency charts. Dollar Swiss currently 101.80. Yet again, when we see the euro weakening, the Swiss franc weakens, and the other way around. So now the euro strengthening, and we're seeing the Swiss franc strengthening just a bit as well. We've seen dollar Swiss rise quite a lot to breaking above 102 temporarily. Now it's finding its sort of line of support here at 101.70 to 102, this high ground. But remember that the Swiss National Bank influences the Swiss franc quite a lot, and this can be seen in the very stable levels of Euro Swiss. So it's 108.35 at the moment, very much in range. 108.10 is sort of support. Anyway, this is the Swiss authorities want a stable and or a weaker Swiss franc against the euro. Euro pound already made this dip and traded in a very clear range between 69.80 and 70.20. Now we're seeing it break higher because of this weakness of the pound, and also we're seeing it, and the euro is strengthening just a bit. Yeah, I have here more. Yeah, thanks Malcolm for helping each other here. Question from Alexei. What do you think the market will behave according to the no strong European GDP, and in case US GDP is also not convincing? Well, Eurozone GDP, first of all, it's already out. It's 0.3 quarter over quarter. And the revisions, the final figures usually don't change anything. So we've seen German GDP, the final GDP just fully confirm the early release. Okay, so no news over there. So what's more important is the US GDP. In the United States, we have 3 releases, and they tend to be very different from each other. So we're expecting today significant revision to the upside. Let's see if this materializes. I think if we'll have better than 2%, or especially better than 2.5%, which has been sort of the glass ceiling for US GDP in recent years, 2.5%, if we'll see that rising above this level, it'll be, of course, positive for the US dollar. And if we'll see it below 2%, it'll be negative, even if it's revised to the upside today. Question. Yeah, in any case, but regarding question, Alexei, the trend is still on euro dollar. The trend is still to the downside. So of course it's not a one-way street. Of course it's choppy, but it could be stuck for quite some time. So even if we have a weak US GDP, we could have US dollar weakening, and then US dollar resuming its strength because of monetary policy divergence. Okay. Anyway, we'll know in a few hours what the GDP figures say. It's also because it's a second revision. Yes, it's the most important event of the week, but it's still the second estimate, and we have other figures released today and tomorrow. So if we have all the figures going positive, it's of course much more impactful than if we have only the US GDP standing out. Or if we have US GDP coming out weak, but other figures are okay, it'll be dismissed. Okay, it's the most important one, but it's sort of the it's not like the NFP, which is taking over markets, because the second release of GDP. Okay. Question from Jax. The one dude from the Fed says inflation isn't ready for a rate hike. Yeah, we have a few such dudes on the Fed. We have Charlie Evans, who he's from the Chicago Fed. He first wants to see inflation before hiking. He's relatively, moderate dove, normal dove. He wants to wait a bit more to be a bit more convinced. Okay, that he has a point. I think that inflation comes after employment, and the Fed needs to be ahead of the curve. He's not the only. He's a sort of real dove, but there is an even greater dove, Naranya Kocher-Lakota, which is retiring. But anyway, he also thought of introducing negative rates in the United States. He's really been standing out. So there are other sort of moderate doves. Lyle Brainard, which is a voting member, and she sort of showed some skepticism. But I think Brainard and Evans are ready to vote for a rate hike in December. Sort of, they're dovish, but they're not fully opposed. Okay, they're in recent comments. At least Evans showed that he's willing to accept the rate hikes. He's given up the fight. Okay. Yeah, another question from Dylan. Can you check pound yen technically, fundamentally? Sure. Let's put the chart back on. One of the favorite pairs. So, oh, that's quite a fall. Yeah, we've seen this sort of break above 188.10, which was resistance line back in September. And now we've lost also 186.23 and quite a convincing breakdown. Next support is only 184.50. We do have these episodes with the pound that it's fundamentally strong. The UK economy looks good. The Bank of England is ready to hike, but then it has these sort of panic attacks, and it's falling, and quite sharply. So it's falling against the euro, despite the fact that in the eurozone the situation is worse. Falling against the US dollar, we're seeing cable at much lower levels. Nothing. What we had in the United Kingdom lately is that what we had lately in the in the UK is that we had the Bank of England talk in the inflation report about hesitating about lower inflation. What we also had in the UK is the government talking about spending cuts. So maybe that has some kind of an influence. And we also had other sort of worries about terror and things like that. But the UK economy is still doing well. Okay. So I think it's a bit unjustified. Another thing that we had just in recent minutes, perhaps it's strengthening the yen. I'm seeing a report about Turkey saying that they downed a Russian plane. Let's see if it's correct. No. No, I can't see confirmation about that. No. Maybe it's just a rumor. Anyway, that if we have trouble in the Middle East, anyway, it's of course strengthening the yen, and that could have an impact. Okay, so safe haven yen means a lower pound yen. You asked me about pound yen, 185.35. This could be related to those rumors. Let me try to check them out a bit more. So that the Turks downed a Russian plane that entered its space from these may be only rumors. Anyway, trouble in the Middle East. Yeah. F-16 Turkish pilots hit a Sukhoi 24, and the pilot managed to escape. Let's see if it's correct. Anyway, when we have trouble in the Middle East, when we have trouble in general around the world, the yen tends to strengthen. Okay. Anyway, the lines here are 184.50 on the downside, and then further on the downside we have 183.80, and on the top side 186.20 and 188.10. Okay, these are levels to watch over there. Okay, more questions? We will review the events of the week so far. Euro dollar ticking up in the meantime. Okay. So what else do we have? Did we have this week and we'll have ahead of us? So we talked about what we had yesterday: strong Eurozone PMIs, okay US existing home sales. Today it's a busy day at the German IFO, US GDP, and also consumer confidence. Tomorrow, the day before Thanksgiving in the United States, we have lots of figures crammed in the same place. We have durable goods orders, which is important for investment. Core PCE price index, which is important for inflation for the Federal Reserve, and US jobless claims, all released at once, okay, at 1:30 GMT. And then on Thursday, we have a very quiet day, not only because of the United States, mostly, but also for some reason we also have very few releases on Thursday. And on Friday, we have UK GDP. That could serve as a reminder that the United Kingdom is doing well and could perhaps lift the pound after its recent weakness. All in all, it's not the busiest week in the year. It's certainly the calm before the storm, because next week we have the ECB and the NFP. Question from Fabian: do you expect significant market moves today with preliminary GDP and consumer confidence, or the big participants waiting for more important figures on Wednesday and not commit today? No, I think we'll see action both today and on tomorrow, because my reasoning is that US GDP is the most important event of the week. Okay, so it's important today. And also, consumer confidence is of importance, so we will see action today, especially if all figures move in the same direction or move to the other. If they're all negative, of course, there will be lower expectations for a rate hike, and this could hurt the US dollar. If they're very strong, both figures, they'll strengthen. Now, yeah, tomorrow we have big bulk of releases. Durables, what I mentioned, durable goods, core PC, and jobless claims. And it's also the last minute positioning before the holiday. So we'll probably have higher trading volume everywhere in stocks, commodities, Forex, of course, and that could also mean more action. So I believe we'll have 2 days of relatively strong action before 2 days of relative calm on Thursday and Friday. I can't say that tomorrow is busier than today or the other way around. Today we have the most important figure, and tomorrow we have the last minute adjustments. Okay, I hope this answers your question. Maybe we'll look at more events, more charts. Oh, for some reason it disappeared. Oh, that's from last week, sorry. Any more questions? Let's look at a bit more at charts. Euro yen, it's finding itself on lower ground, lost another support level here at 130.60, which provided some support. So we're already seeing lows of 130.36. Relatively stable, even stronger yen, and the euro is still feeling the pressure, even though it's recovering just a bit at the moment. We talked about pound yen, the Gepi, the dragon, the pair that provides a lot of pips. So we have it now in the past hour during the show falling to 185.40. Watch out for 184.50. Okay. Oil prices, we mentioned them. Well, not moving a lot. 42.20, support 42, resistance 42.70. Okay. Aussie against the Kiwi, we're seeing it broke above this level here, 110.35, and moving a bit higher. Actually, yeah, it's in the highest level since late October. Further resistance is right here. I don't know which pairs you guys trade. I know that pound yen is very popular. Okay, let's take a look at gold prices. 1073. Still sort of licking its wounds, trying to find support. We had the break under 1070, but since then it has stabilized. Yeah, let's go back to euro dollar. More questions? This, for some reason, the Fed Watch tool for rate hike implied probability hasn't been updated. At least the data I have hasn't been updated since Friday, and it still shows 74% chance of a rate hike in December. We had a comment from PIMCO, one of the huge investment companies in the world. They said that they also think that the Fed will begin the liftoff in December, okay? Which is sort of aligning with consensus. Let's see what else. Talked about the Fed. I mentioned earlier that I believe the Fed will act in December. So let's maybe talk a bit about that. Also in the context of today's figures. So the Federal Reserve is expected to hike in December, first of all, because they told us so, okay? They gave us a hint in October, and they explained this hint in the meeting minutes, okay? So in addition, the big question is it priced in or not, okay? So partially priced in, yeah, because we're seeing the dollar strengthening, not fully. In the past, we had cycles where once the Fed began tightening, once the first rate hike came to fruition, came to life, then we had a weakening of the US dollar. This could happen again also this time, but I believe it will not happen immediately. I believe it will happen only after some time, because markets are still skeptical that the Fed will be able to raise rates for the first time since the crisis. Actually, the last time the Fed raised rates was back in 2006, okay? So many market participants have just not seen a rate hike in the United States, okay? So that's what's going on. That's why I think we will have a positive impact on the US dollar once it happens. I have a question from Malcolm on the dollar yen. Could you show the levels you're watching, please? Sure. So let's go back to dollar yen. Dollar yen is falling now. In the past hour, 122.56. The low so far, 122.54. So we're close to the lows. I marked this level of 122.73 as some kind of support, but as we can see, it's quite choppy, not really strong support, and we're below this line. We can add this swing low here, 122.20, also as weak support. Once again, we had a swing drop to there, not a really. It's not that the pair settled there, and from there it climbed back higher. 122 is this strong support because it served as resistance right here, but that's certainly not the only reason. It also worked in the past. Let me try to zoom out just a bit. Try to show you. Yeah, 122 served as support also back in July and August. So that's why I see it as a line of importance. Okay, on the downside. On the top side now, 122.75 turns into weak resistance. 123.20 or 123.30 is a weak resistance as well, and 123.60 is strong resistance. Okay, we had it capped the pair here, and then we had a swing high above it to 123.75, but that was just a knee-jerk reaction on the meeting minutes, which was then reversed in full. So big levels I'm watching here are 122 and 123.60. Okay. Yeah, let's see if I can get more news about this. It's of course a bit worrisome when the Turks downed a Russian airplane. Yeah, it happened this morning close to the Syrian border. No confirmation yet if it's a Russian airplane, but we do know it's a Russian make. It's a Sukhoi 24. The two pilots managed to escape, to eject. Okay, of course there's. Why am I talking about? Why am I talking about Turkey and Russia and Syria? Because it also any flare-up between the West and Russia around Syria, which was always feared, even now it seems they're cooperating, is always worrisome. Okay. In the meantime, I see more questions. I see that Alexei says, I see that pound dollar is down. Should it bring the euro dollar down too? No, there's not always a good correlation. I mean, in the past, there used to be a dollar against everybody, but now the pound is sort of more in the camp of the US dollar, or it's not really clear. There's monetary policy divergence between the Eurozone and the UK, so they're not really going in tandem. Okay, so currently 151.21, 151.10. I think it's just one of those panic attacks in the pound, and it'll be eventually reversed. We had these in the past. You're welcome, Malcolm. Thank you for the kind words. Fabian says FX Street calendar reports GDP, PPI, and GDP annualized. What is the difference? And what is more important? If consensus is met but not exceeded, will it be considered good? Will it be considered good, or are there already high expectations and therefore it will drag USD down? Well, the most important figure is the annualized GDP. There are, of course, also related figures like the deflator, like the personal consumption, which is perhaps the most important component of GDP. But I think that we should focus on the headline GDP, not anything else. Another measure is GDI, gross domestic income. Some economists prefer measuring income instead of produce. Anyway, the one that is looked at the markets is GDP. Okay. If it's met and not exceeded, what we had in recent days is that good enough data is really good enough for the US dollar, and it should be enough to keep it supported, to enhance the expectations for a rate hike. It's important to remember that this as expected figure means an upgrade from 1.5 to 2%. So it's good news. So it's also a round number, 2%. So if we have 2% or higher, I believe it's good news. And if we have below, it could be bad news for the US dollar. But remember, if it's just a bit below 2%, of course, it's disappointing. But if it's still an upgrade from 1.5, and it's a bit better. Okay. Malcolm, you had some issues with the screen. I hope everybody can see the show as usual. Hopefully it's only a problem with your computer, Malcolm, and be solved quickly. Alexei, you're most welcome. Okay, I guess it's time to begin the wrap-up for today. So this is the wrap-up for November 24th. Today's Tuesday, and we had quite a few developments in markets, and today we're expecting a busy day. We had better Eurozone PMIs, forward-looking indices, and we had comments from an ECB German member that said that there's no need to act. Sabine Lautenschlager or something like that. So that provided some support for the euro, but that was on temporary. Existing home sales in the United States came out as a small miss, but okay in general, 5.36. That gave the dollar the boost. Euro dollar fell below 106, but then recovered. Now it's even a bit higher than yesterday. The big news from yesterday came from Saudi Arabia, saying that they're ready to cooperate with OPEC and, of course, non-OPEC members, which is more important, in stabilizing oil prices. And that means reducing productions that supported the price of oil and helped the Canadian dollar. Today we have a busy day. German IFO business climate just after the show expected to show more of the same stability despite Volkswagen, despite refugee crisis, despite worries about China. 9:05, RBA's Glenn Stevens, the governor, is speaking that could have an impact on the Australian dollar, which is, of course, showing some strength recently, thanks to some good figures from Australia. At 1:30 GMT, the biggest event in US GDP, it's expected to be upgraded from 1.5 to 2%. At the same time, we have the goods trade balance, which is expected to show worse deficit. At 2 GMT, US case chiller house price index, and another important figure at the end of the US, close to the end of the London session, the CB Consumer Conference, the Conference Board measure for the future. So we have a look at the past from GDP and at Q3 and look to the future with consumer confidence, which is very fresh. And to close the day, we have Australia closing the day as well with construction work done. The pairs to watch today, to answer your question, Jax, are first of all euro dollar because of the IFO figures and the US figures, of course. 106.49, resistance at 106.70, 107.10 support, 106 and 105.30. Pound dollar because it's falling a bit too much in my opinion, especially in the last hour. 151.24, 151.10 works as support, 151.60 as resistance, followed by 152 and 152.50. Dollar yen falling now 122.51, support at 122, 122.20, sorry, and then the top bigger levels, as I said before, 122 and 123.60. Dollar CAD, let's see if we have a follow through on those oil comments towards the OPEC meeting on December 4th. 133.37, resistance 133.70 and 134.60, support 132.80 and 132.40. Aussie dollar, another pair to watch today. 72.13, 72.20 works as resistance, followed by 72.80, and on the downside we have 71.50 and 70.65. Kiwi dollar well within range. Today we have nothing New Zealand related. 65 to 65.70. Okay, so we have quite a few currencies to watch today. It's a busy day today. It's 2 days before Thanksgiving. US GDP is the main release today, but certainly not the only one from the United States, not the only one from the world. So we're also tomorrow we'll have a busy day. The news about this we had during the show, that Turkish forces downed a Russian airplane. Still waiting confirmation anyway. This is some kind of an escalation. Turkey is a NATO member. Everything is, of course, related to the war in Syria, the various wars that are there. It's a huge and very sad state of affairs in Syria with all those civil wars. Anyway, so have to watch that. Of course, bad news, global worries, tension helps the Japanese yen. So that's also a currency to watch. Okay, so that's it for today. Thank you everybody for coming. Thank you very much for the questions. We'll be here tomorrow talking about what will happen today and of course what will happen tomorrow. These are the busiest days of this week. So thank you everybody for coming. I wish everybody a safe and successful trading day, and see you tomorrow. Thank you. Bye-bye.